Guys, welcome back. We are going to continue this conversation with our boy Capital Flows. Hot off a pretty solid week from what I gather, and we talked about a few trades here last week when we were kind of going over how to have a good trading talk and back and forth and develop a thesis and talk about what could go wrong or how you position yourself or risk management, blah, 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 blah. So wanted to get back on here, kind of break down what went right, what went wrong, kind of current views on the market, any interesting changes to the outlook going forward for flows, and just maybe touch on some other things. So flows, welcome back. Why don't you kind of go over some of the stuff we talked about last week and kind of tell us where your head's at with everything going on?
Yeah, so let's see. I think last week we talked about basically higher equities, lower bonds, I believe, and then a higher crude price. And we've seen a lot of that play out. And I think the interesting thing is that there's been some pretty significant developments over the last, I would say, 5 to 10 trading days where the risk, in my view, from all the kind of updates I've done is, in my view, there's going to be a significant increase in macro volatility over the next 2 to 3 months that we haven't seen for a couple of years. And that macro volatility is going to be primarily concentrated in the long end rates blowing out to the upside. So the 30-year interest rate in the US, UK, Germany, broad Eurozone, all going to likely blow out to the upside in my view. And, also in the interim, see equities rally a bit as part of the fuel to push those rates higher. But then eventually you're going to have it drag on equities. I think we're still seeing this massive credit cycle begin to, take place. And I would say we're in like stage 1 of 5 for it, where you just have this drawdown in equities and every single commercial bank on the street saw that. And they put out a call. They were like, oh, it's a recession, this and that, Goldman Sachs, Morgan Stanley. That's what they said. But if you looked at what they were doing, they were issuing debt at the lows, basically. And as we rallied off the lows, they were issuing debt to corporations at wider spreads and making more money and continuing to take on risk. So, they're still playing the regular game that they play, where they're trying to over extrapolate market participants and then actually just collect fees hand over fist. And that credit that they're injecting into the system is going to push growth higher, bonds like the TLT ETF lower, and in my view, crude higher from here.
Real quick, how, this gets into the whole sentiment and, watch what they do, not what they say. And at this point, should we be taking everything we read, even from these the largest corporations and biggest institutions in the world, with the absolute tiniest grain of salt? And if so, where are the most confident reads for you when it comes to what's actually happening?
Yeah, so it's actually interesting. I think this idea, as we've entered into this age of social media and information, it's shifted. Those videos about lockdowns and vaccines and mask mandates that people clip those things together, where of the media, where they all say the same thing, where it's like, we need to do X, Y, and Z, and and then some of it's super arbitrary stuff about whatever views you have, right? And every single they all say the same thing verbatim, and it's kind of funny because I thought initially oh yeah, whoever it is just feeding these people all the same line and telling them to say it. And then you go on Twitter and you see all these private, quote unquote, independent news media people, and they talk about, oh, that's the media, but then someone posts something and then everyone just mimics them and says the same thing.
Yeah.
So I think what we're seeing on social media, we're also seeing on especially all the press conference for the FOMC, and then all the kind of communication out of central banks and the Treasury. I think they're all very specifically coordinated because they're not just communicating information, but they're trying to adjust expectations. And corporations are even doing this as well. And I think the fact that you have Powell in direct communication with all central banks every day, and then you have the Powell, or whoever is managing the media team directed by Powell, they're deciding and letting certain reporters ask certain questions. You can't just get in that room because you're a nice guy or you're a quote unquote reporter, right? It's all curated and tailored, and they give you this lie that you have independent journalists in the room, where they might say they're independent, but they have to fit the corporate mold and the power structures of what they're in just to be able to get in the room and ask a question. So I just think everything in terms of the communication out of the authorities that we see from the central bank and Treasury and everything like that, and then also all the media around them, all of them are just tailored, I think intentionally, or just with the expectations that are set to allow you to have access to like very specific questions. I mean, it's almost like even podcasts today, right? Like if I'm like, oh, I want to get a really heavy hitter on my podcast, like I can't just say, hey, come on my podcast and then ask them a question that's super controversial to their character or something. Like you can't just ask that, right? Like,
right.
People will just walk off, or they'll, it's, you kind of have an expectation, and then no one else will want to be in your podcast, and then it's a feedback loop, right? I think there's a reason why all the podcasts that are out there that are whistleblower podcasts or whatever, they never have any guests. It's always the solo guy. So I don't know. It's a very interesting. I think information is so curated in a good way and in a bad way today, and it impacts markets.
Yeah, it makes a lot of sense. I guess it goes back to like one of the things we've talked a lot about with you is original thinking and trying to ask better questions and look a little bit deeper than what's like topically being shown to you. Because if it's all similar things being reinforced and you're not ever asking tougher questions, then it's basically like you're just at the whim of whatever is being flooded to you, right?
Yeah. Well, how would you, I feel like you're much better at working through like narratives and their signals and significance. And I think part of your process is going through Twitter and these other places and just seeing what people are saying and what the sentiment is. How do you feel like that has shifted over the years for you? And how do you kind of get into a place where you're like, okay, I'm not in my own echo chamber bubble and something like in that type of position? How have you developed that? And then where are you at right now with that?
Yeah, I would say it's getting harder. Like, I feel like I had a pretty good feel for developing a timeline that had a lot of different takes and got me to think about things a lot differently. It'd be, let's say, something super bullish, and then there was immediately followed by something that was the opposite take. And I don't know how algorithms shift around, or if I'm spending too much time on a specific, my eyes are spending too much time on specific things, that it's always like ever changing. And recently I've felt like what you're saying is like way more prevalent. Like I'm seeing a lot more parroted stuff, like especially in the crypto ecosystem. Like if somebody puts out a report, there's just an assumed like truth to it, and everybody just starts posting it, not even reposting it, but like putting it in their own words and pasting the same thing. And it's making me question a lot of stuff because I'm seeing this too much. It doesn't add up. Like the China trade deal, right? That was one where it was basically like somebody reported that we made a deal with China when they were in Switzerland.
Yeah, I remember that. Yeah.
And then it was just like everybody was saying a deal was made. And then like 2 hours later, I saw something that was like, China didn't say that we made a deal. They said there was good progress. And then there was new articles that came out that said like, oh, like they've had good talks. And then all of a sudden it was like 90-day pause or something like that. Right. And I was like, Jesus, like just when you think like you found good sources for something, they just parrot. And now like the trust of that source is like, now I have to reevaluate how I respond to what I'm seeing. So I've actually been doing a lot less like reactive thinking these days because with all the stuff with Trump and the kind of volatility of positive news, negative news, positive news, negative news, I'm starting to step back and to be like, all right, how are the markets reacting to these news things? And it feels like the market reactions are getting to be a little bit less and less, and I have to take like a broader look at things. So it's making me trade less. It's making me think more. And but I would say it's a new, definitely a new shifting paradigm for me and how I'm approaching things. I don't really have a great answer, honestly.
Yeah, that's interesting because when I was building the AI bot that I built, and you basically need to figure out the different types of information sources it pulls from. So it's like you give it a corpus of knowledge. Let's say you upload 5 articles to it, and then you give it a prompt and say, give me a thread or an idea or whatever it might be using this corpus of knowledge, right? The interesting thing is I was reading some articles on it because a lot of the AI agents or bots or whatever, they've really started in the crypto space, right?
Yeah.
And they haven't started in TradFi or anything else like that. And all these guys in what they're talking about how to make this bot and everything like that, they're like, well, you need to first start with key opinion leaders, KOLs. It's like, okay, and then you need to pull an API to their account and pull all of their tweets. And you need to do that with all the key opinion leaders. And then you synthesize that to your view. And I just thought, yeah, but all those guys are wrong. I know, like it's, and then I was just like, wait, this is what you guys are doing? Like, this is stupid. Like this, and it really brought me back to, I think this goes back to like, how do you come up with a view? I remember when I first started reading books and doing more research on some projects I was working on, because I didn't grow up doing any of that. I remember someone who had a big influence on me at the time really instilled into me, you have to do source research. You can't use second to third order research on things because you always have to go back to the source, because every single time you move a step away, it's like telephone. And I remember that being instilled into me with a ton of conviction because I had made some mistakes and said some things and written some things that were just wrong. And I didn't know why, but I was just like, well, look, but this person says this. And it was just like you can't do, like, that is unacceptable. And I remember that being instilled in me. And I feel like that set a precedent in my life just for how to think, because now I'm always trying to dig deeper and ask deeper questions and get to the source research and source of things, as opposed to the second to third order effects, right? Like I want to start with the source and the fundamental principles, and then try to predict out what the second, third order effects are, not taking the second and third order effects as the starting point.
Yeah, that makes sense. And then at that point, I feel like the comparison between the combined views of other people should be like the last step. Like
Totally.
it should be like, oh, interesting. My first principle source style thinking got me to a point where I now have a view that's completely opposite of the mainstay take here. And then I guess you have to make the decision like, do I trust myself here to execute that idea or not? Right. Which I'm sure could change, but it seems like it should be the last step is just bludgeoning yourself with information from people with a following. Seems
Yeah,
dumb.
totally. And then it's also every single statement by another person, right? Like let's just use Twitter for example. Like for any thesis that I do, part of the last section, I never start with this, but like part of the last section I'll go through is just you can run an API to Twitter and pull every single mention of a certain idea or sentiment or ticker or whatever. And you can overlay that on your thesis and your price action and stuff like that. And like I feel like we always do that, but the main idea is that every single thing that people talk about, it's all for different purposes and then also with different time horizons, right? And then it's also this idea that like just because you have a insight doesn't mean it's providing value or it's monetizable, right? And I remember someone sharing the example once of, just because you can say a true statement that's super unhelpful, right? Where it's like, someone says like, why did the twin towers fall? And you're just like, well, because of gravity. And you're like, well, that's true, but that's almost a little like, manipulative or decide, not really showing the full truth, right? So it's true. And then I just think in social media and everything else, you say all these true statements like, oh, S&P's here, this asset's here. But how helpful is that actually? Right. And I use an extreme example, but I think there's a lot, a lot of other shades of gray in there for, me saying, oh, this is happening today, but it doesn't really tell me why it's happening or how the why is setting the conditions for the next, move or any of those things. Right. So I don't know. I'm always trying to dig into that and find my own mistakes and I already have enough mistakes in my own head. I don't need to go on Twitter and find other people's mistakes. You're muted.
Sorry, one thing I thought about when you were saying that is like uh I'm starting to pay attention more to, even if I have disagreed with them in the past or something, is trying to stay open minded to like who is seeing the markets well right now. You know what
Hmm.
I mean? Because everything's changing so fast that it's like who is tapped in right now and kind of seeing things right, because momentum is a real thing, and if you can find yourself aligned with an idea that is also aligned with somebody who's seeing things well, that's a powerful thing. It's like when we have a conversation and two ideas converge into like a trade, right? And one thing I think of with you right now is in this past week or so, there's been this very difficult, I would say, range of outcomes and thoughts and opinions on, was this just a dead cat bounce? Is everything going to roll over? Are we not having a recession? Have we been in a recession? What are rates going to do? All this stuff. And now I start to think like, okay, um, I've read some of Capital Flow's thoughts here on kind of where he sees things going, and they're playing out right now. Like it's happening. Like the past week or so, I would say you've been really dialed in, right? And now when I hear you say, I think something in the next couple months to 6 months or whatever, there's going to be some very violent moves or whatever, and you have been starting to get things correct. I would say as a viewer, you should start to really pay attention to global flows right now. Do you know what I mean?
Right.
Like ride in, try to step into the shoes of the people who are seeing things very well right now, even if in the past, like you haven't agreed with them. And there's a couple people in crypto who have done that, and I've had to open my mind to be like, okay, what did they see there that I'm not seeing.
What do
And I
you
think,
feel
yeah,
like is the discernment you use to kind of see between someone having like a hot hand fallacy and then actual momentum and clarity? How do you discern that?
I guess it's usually just how things are spoken, and can I really understand why they were doing what they were doing? Not just like a call, It's not
Right.
just like oh, I like this here, right? Like when you write out a report and you think that um inflationary pressures on inflationary expectations on the long end, it's going to boil over to CL and ags, and it's actually not going to hurt equities and all this, and then it starts happening, and then you start to talk about this idea that the eurozone basically has made like a blunder in your eyes, and that they're cutting into what they thought was a bigger issue than actually is the issue, like with the tariffs and an
Right.
economy that's not like it's actually not having super slowing growth or whatever. That I'm starting to already jump to where you're heading, because like I saw the process. There's a lot of people
Right.
that don't have that like laid out, right? They don't, but there are a few people that really get into why they're doing what they're doing. And if I notice that, I've traded a while, I'll be like, okay, I saw their thesis, the thesis played out,
Right.
I need to pay attention to something. They're seeing something, you know what I mean?
Well,
um
that's a very interesting one, because I think in terms of the momentum or validity that someone has with their view, I think you kind of have to follow, in a sense, the progression of it and
yeah,
see when they're winning and when they're losing, and when you want to size up, in a sense, in their view and not in their view, right?
yeah,
Because I think that's one of the things that's very interesting on. Um, Obviously, there's a lot of subscribers on the Substack, and naturally, some people are going to be more involved than others, whether it's from pure desire or just constraints that they have, right? But every single time, like, one of the things I try to do is always set the context and then be like, if you just read these 5 articles, you'll have the context, and then you can read this one and get the full picture. But so many times people will ask basic questions that show that they haven't been following the flow, which is,
yeah,
that's part of the process. There's nothing wrong with that, right? But it's super tough to, kind of come in halfway through. Same thing with a market, right? If you're not watching it every single day and getting the context and knowing what's happening, then you're just going to miss a lot of things, and then you're going to end up just making mistakes, right? And you kind of have to, I feel like with other people too, you have to kind of go through their wins and losses with them and know when to size up and size down. I
mhm,
mean, it's interesting even working with that with like other people, when you like have people that you hire or outsource work to, or you work with, or anything like that. Like, they're going to have periods of good performance and bad performance, and you can't just fire them,
yeah,
right? And you can't just, or just like pull a task or something like that. I mean, you can, but you have to like understand the picture, I think.
yeah. I think it's like super solid point. And I think a lot of us do that subconsciously. We are kind of following along. Yours is a little bit more complicated, right? Like you need generally a base level of understanding. And if you don't have that, you have tried to put together a way to get up to that level of understanding through all of your kind of educational stuff, primers and things like that. But, um, takes a lot for the recreational person to catch up and then get on board with where you're at exactly right now. But for the people who have that, um, this is like to me where you get some. This is like the power of the network, right? The power of like the leverage within the things you're using as tools to learn. Because like I'm like, okay, Flows is dialed in currently to this exact moment, and he's starting to set up something down the road here. Now, does that mean I have to take the trades he's taking all the time? No, but like, what if there is one that really sits well with me, is aligned with how I trade, what my goals are, what my time horizons is, and I understand exactly how he's gotten to this point and where he thinks things are headed. Like, to me, that just like gives 10x value leverage to what that next like execution should be, you know? Um, and that could be the thing that like makes your year, or like,
Right.
you know, makes your quarter, or makes more, whatever. So I think speaking this out is probably how I do it. I think subconsciously I just tend to do this, but that's probably the step by step view on
How
how I'm navigating different people out there, different ideas.
do you feel like you've always had that subconscious intuition, or how do you feel like your subconscious there has kind of been refined over time?
I think what I'm good at is noticing like regimes shifting, even if I don't know why.
Yeah.
Like, I'm pretty good at keeping up with what's happening, but that took me, I would say, since we started talking back in like 2020, right? Because
Right.
I went from zero macro knowledge to what I think is like a C in macro now, like
Right.
maybe a C plus or a B minus or something, where I get how a lot of things work, but I also then I hear about some other stuff and I'm like, Jesus Christ, I don't know anything. But from that 5 years of just like, you know how much content I consume, right?
Oh yeah.
Like, I'm just taking in,
It's
taking in,
disgusting.
taking in, and trying to like get it to some sort of uh framework, and then bringing in people and their ideas, just because I personally feel like I don't come up with my own ideas that well. It's never really been a strong suit of mine. So it's like, okay, how can I leverage other people's ideas to fit with a trade that I like? Right.
Right.
Like, and then just fucking hammer it,
Totally.
and go from there and be okay with that. I think a lot of people would probably be better off. Like, I feel like they're more suited to that than somebody like you, where
Yeah.
you're going first principles and kind of trying to shut out the world.
Totally. Well, and I think the the powerful thing behind both approaches is that we're both trying to do the same thing of get a trade on sides and hold it.
Yeah.
And I think that's what I find, so cool about markets is that all I need is there's like that clip I'm posting a couple times on Twitter now where it's like the guy, he kind of just gets lucky in the trade that he does or whatever, and
Uh-huh.
he's like, you're
Yeah.
not even a good trader, you just got lucky, and he's like, tell me the difference or so, something like that.
Yeah.
And I just think like so much of like what we do is you're just like, oh, let me try to get on sides here. And then it's like, oh, I got on sides. Oh, well, maybe I'll hold this for a week. And then it goes in your favor more. And you're like,
Yeah.
well, I guess I'm just going to set my stops here and just wait and see if it, hits my, and then it just keeps going. And then you just hold it. And you're like, well, how would you make so much money? Because, that all these things, like you don't know anything. And I'm just like, I know, I don't. So, it's all you
But it's
need.
like, how would you have gotten that trick? Like, you know how like you got there, but then you look back and you're like, oh, I should have really like hammered that one or sized that
Totally.
one up. And that's why I feel like it goes back to this thing is like, this is the setup now, right?
Right.
The work was done beforehand, the subconscious tracking of somebody, and they're like, whatever. That's how it fits with you. That's all should be happening proactively. Um, because often you will find yourself in a great spot. You will be on sides and it will be actually a great trade, but you won't really have known why.
Right.
you know, like
Totally.
you'll just be like, "Oh shit, this was like great." And if you had only like harnessed what you were doing in the background leading up to that, you might have been able to put on 5x the size there or something.
Yeah. And then it's just the process of always I think that's the hard, like, I think especially on the discretionary side, when you're not using any algos or anything like that, like, you're basically like, in my view, I view myself as like, I come in every day and my goal is just to like always be in the constant process of trying to bat singles and get a trade on sides.
Mm-hmm.
And I'm just like, I know I'm going to take a lot of losses, but they're all going to be a lot of small losses, right? And let me just get really, really good at just kind of, oh, let me try to get long here, short here. Oh, that didn't work. You know, it's within a larger view, right? But my whole thing, I forget who I was talking with this about the other day, but we were basically talking about how, our whole goal is like, if I have a macro thesis about being short bonds, then I dig in and I run some other models and I basically say, like, let me get, part of my position, just try to get it on sides from like a technical move or this or that or whatever. Let me try to just get it on sides and then set my stops at break even and then just let it run in a larger macro view. And then if I get stopped out of that, it's fine. I just got stopped out at break even or maybe a little bit of a loss. And then from there I just keep trying to put on another trade, get it on sides, and then go and then just hold it and set my stops at break even and just keep going and going and going and do that over and over and over. And if you keep doing it in those larger theses, then you get to hold them longer and longer and longer.
Yeah. You'll like this one. I don't know if you had told me this a long time ago. I know and I had heard it before, but I was just listening to a podcast yesterday with the 1000X podcast with a couple of traders.
So the Blockworks one?
And yeah. Which, by the way, I'm so sick of Blockworks ads. Like, dude, they put way too many ads in their stuff. I mean, we're talking a 45-minute podcast, and they have like 10 ads.
Really?
Like,
10?
yeah, they do like 2 at the start, and then like 3 different segments of ads, and then they'll tack one on at the end. It's like ridiculous. All right, maybe it's 8, but like, you know what I'm saying?
That's
So like,
brutal.
come on, bro. So like, I'm just like, they didn't even use these products. Like Wallet Connect. Yeah, sure, you're out there using Wallet Connect, bro. Come on. But anyways, they were talking about this book or something that Roger Federer did a long time ago, where he was giving a speech, I believe, and he said that he won 80% of all of his matches in his career, which is like obviously pretty dang good.
Yeah.
But if you were to break every match down to like individual points,
Yeah.
that he actually only won 54% of all of his points.
Hmm.
Which is actually pretty crazy to think about, given that he's the GOAT, you know?
Yeah.
So like thinking back to trading, it's like singles and doubles, but in the end, winning the match.
Yeah.
Right. So I thought that was a cool reference to kind of what you were just saying there.
Yeah. I guess you only realize it in hindsight, but it's basically the opposite of this kind of mindset of like, well, I only need to just size up in one trade or like, I only need whatever. You do only
Another
need
double.
one trade, but like, the idea where you're just like, oh, if this just works, then I'll be good and I can just leave tomorrow or something. Right. It's just kind of like a lie you tell yourself instead of saying like, okay, I'm going to bat singles for a year or two and just get really good at taking losses and really good at taking gains. And then the big trade will come when it comes. That's
it's like it's like a fixed mindset when you think like, oh, everything revolves around this one trade going right, rather than like a process / like abundance type of mindset, right?
Yeah.
Like there's a lot of opportunities. I'm going to stick to the thing I know and how I approach this. Some are going to go right, some are going to go wrong, but eventually that one pitch is just going to kind of come when I didn't expect it to come.
Right.
And it's just like, can you be aware of that pitch coming when it comes? If so, like, that's where the gigantic return is. Not that that's easy,
Well, I feel like we've talked about the different, I don't know if you would say crises, but like periods of vol that you've traded through and how you've gotten better and better at each one. How do you think about that progression that you've had?
I feel like I've gone through, let's see, like the first one was probably 2015, China devaluation,
Yeah.
2018, quarter four, 2019, Volmageddon, 2020, fucking
What
Iran
happened?
issue, and then COVID. Well, there was the Iran thing like right before COVID that nobody
That's
even
right. I
remembers.
remember. Yeah.
There was 2022 bear market, which was really awkward, and like all these. Oh, the Japanese yen blowout in August. Like, was that a year ago now
Yeah. Yeah.
or less? Like all of these things, even the recent tariff scare, um, they're so valuable. Like, obviously, like I did well in some of them and made money as a trader, but like, boy, do you learn a shit ton about markets and expectations of like range expansion and volatility and the VIX and just like sentiment and big echoes and at what point is the world ending. It's pretty crazy, and it gets louder and louder every year, right, because of all the voices out there. And
Yeah.
I think I've gotten better at really realizing when we've kind of had enough. Like this last one, I like did well picking the bottom there
Yep.
for most of my stuff. I was just like, dude, like I have to say this one was probably a little easier than most,
Yeah.
because like there are some that convince you, man. They just convince you that
Totally.
like there's still more to come, right?
Yeah.
Uh, this last one though, I was just kind of like, nah, like this can all be walked back, and
Yeah.
like we're not starting World War III here. The dollar's not done. People aren't stopping buying our bonds. Like just all this shit. Like and my favorite part was seeing some of the big names in crypto really sinking their teeth into it, because like you could tell when, and maybe I'm wrong here, and I don't mean to be cocky, but like you could tell when somebody's really hooked into their first like doomer story. You know what I mean? Like they're really like they think it's over, dude. The great reset's coming. Like we still have super high inflation. No, we don't. We have job markets falling apart. No, we don't. Like global tariffs, like as if you know anything about fucking tariffs, dude. And like uh China, and we're going into like this cold economic war where we're not going to be able to ship trinkets across the oceans, and the economy is going to fall apart because Orange Man said so. Like shut the fuck up. Like at that point I was just like, dude. Like I'm sure there were some people out there that were very similar that like made their career in the last couple months.
Oh
You know
yeah,
what I mean?
for sure.
Like, so I think I'm getting better at just kind of having a little bit of a calmness throughout them, because they start to all feel similar in weird ways, uh, and I think they're going to keep happening. Like I don't see why not. Like the speed wobble thesis of mine, like I just think we're going to keep having crazy ever increasing speed wobbles until we fucking crash. But that speed wobble can, who knows how long we're going to go with that.
Totally.
So executing around those edges is tough, but that's what experience does for you, right? Like you've seen a bunch of them now too.
Oh, for
Yeah.
sure. Yeah, I think it's going to be really interesting. I think one of the things that I wrote a thread about this, but on these like speed wobbles, it seems to me that it's not just the sentiment that's taking place, right? But it's like the overwhelming biases that we have, or I would say that the industry has. And I think this is actually one of the downsides. I don't want to say of experience, but just kind of almost like traumatic experiences in the sense that there's so many people. I feel like after COVID and coming in 2021 and coming into 2022, that were like, listen, a recession is like 2008. A market crash, that's 2008. Or, it's just everything is 2008. Trust me, bro. I was in the real estate market at that time. Trust me, bro. I saw so much stuff. Like, trust me, bro. And there was there's this superiority complex around I've been through 2008 and I know what I'm doing. And then 2022 comes around and stocks and bonds sell off at the same time because of inflation. And it's the complete opposite of it's an inflationary bear market instead of a recessionary bear market. And GDP barely goes negative. It doesn't even go negative, right? And, it goes negative for one quarter, whatever. And everyone's arguing about a recession when earnings are still at highs. So, and then I just think I think we're in a similar period of time actually, except I'm not super bearish stocks. I don't think we're going to take out the lows this year or anything like that. I think we're positive on the year to date now.
Yeah, I think so.
I remember reading this study once about it goes through every single like even during COVID, the market, like 2020, the market ended positive, right? And it was going through like, yeah, you can have bear markets, but like it's super difficult for the market to have a negative year, close the year negative. It's super difficult, right? Even though you can have massive drawdowns in the interim. But I think we're entering a little bit of a similar period of time where everyone's just like, you don't get it. There's this recession coming. There's this and that. And these tariffs are so bad and blah, blah, blah. And in my mind, like the biggest risk is like an unwind of all these boomers, which is basically like fixed income.
Yeah.
Whereas this bias that like we're going to crash one day and bonds are going to bid. And like, I just feel like I'm not basing the logic for the trade off of this, but like, I just feel like until we see all of these 2008 bros who are like, this is why you want to be long TLT because the housing crash is coming, until we see them be like, yeah, maybe you don't want to own bonds anymore, or maybe there shouldn't be part of a point. Like until we see those guys capitulate, like structurally, there's this embedded bias about that the world works according to 2008 financial crisis, and it just does. Like in my view, we're gonna have one of the biggest blowouts in the long end with the 10-year going up to 5%, and it's just gonna scare people.
What do you think about then, like this whole idea of the scariest words in finance are this time is different? Because like arguably, I mean, these times have been different, right? Like it's not the same. You can't just like pick an arbitrary recession in the past and say, you guys don't get it. It's always the same, Like you just pointed out that there's a massive difference,
Totally. So this is actually super interesting, and I actually think it connects to AI. So I believe my view is that this narrative of this time it's different or it's always the same or something like that, they're just straw man arguments that are used because you suck at your job. That's how I think about them. Because like basically, and the reason why this connects with AI and machine learning is because all of us will take like an example like this, like, oh, yields are going up and this thing is happening. And then you'll say, let me go find the periods in history where that was similar, right? And we'll basically go and anchor on something where it happened. And basically I'm like, oh, let me go find where this was similar and like go find a historical parallel and use that to have confirmation bias for my view. And these people will be like, you don't get it. It's the same as the 1970s. Nothing has ever changed. And then they'll be like, oh, this is what happened to 2000, right before 2008. Nothing is different, whatever. So the interesting thing about like these machine learning and AI tools, which are, similar in some aspects, but is that we take one instance and we'll look for parallels. It does the opposite, right? It takes every single move that has ever taken place, all the correlations, maps them into binomial, or not necessarily binomial, but trees, like decision trees of like all possible combinations. And then it takes the current one and it says, where does this fall in every single change that has ever taken place in history in every single possible combination? Let me map all the trees and then let me see what the probabilistic kind of outcome of how things are taking place is. And it starts from a bigger like sample set as opposed to going from one example to another, right? Because Because also, like, if you take the yields going up or equities going down, you basically always go to like, well, let's see what happened right before 2000 or right before 2008.
Yeah.
And I just think those people, they're just not going to last. Like, I mean, they last on social media because it's a narrative, but they're not going to last in markets because it just doesn't work.
Yeah, it just seems like such an archaic, I don't know, process of thinking or something. It's just, no, this gets into a broader thing, and we'll wrap it up here soon. But like this idea that like we want to see the world burn, you know what I mean? Like this young cohort of people, like I- there's this thing like we just want to see it all fucking burn down. And that's why I think a little bit of like when you get into a doomer story, you're just like, fuck yeah, like let's reset this bitch. Let's, send this thing down 80%, make all the 401k flows, make all the boomers cry like they're, whatever. Um and I'll be honest, like as a trader who capitalizes well, previously capitalized on a very big downward movement, like
Right.
it's easier for me to get bought into those, right? Because I'm like,
Yeah.
yeah, like I'll be the only one that comes out of this good. Everybody else will be wrecked. And like, it took me a while to be like, that's gross. Like it's a gross way of thinking. It doesn't do much for me. It's very like you get very few opportunities to like take advantage of it. Um, it's just like this weird mindset that I think a lot of younger people have, and it just seems like a generational issue.
Well, I think that it's like almost like it's on both sides. I think with young people and then also boomers, and because boomers are like, you kids don't get it or whatever. But I saw a thread the other day with a guy was talking about how so many, just on a demographic basis, like so many of the boomers, their entire life was like they targeted low risk, whereas like they're like, I'm going to be at this company for 20 years, collect my pension, buy my house, and then just go home.
Mm-hmm.
And like now that has less appeal, partially because it's more difficult to do that these days, but then also is like all of young people today, like they take way more risk, right? Maybe they spend just as much time at work, but they're much farther on the risk curve, right? And I think that's very interesting, like culturally, because it's like you see this young person, whether it's through trading or some other thing, and they make 500,000, $1 million in a year or something like that. And then it's always like, you guys don't get the value of hard work. You guys, there's all these things thrown at them, even if it was from luck. But like, there's all this stuff thrown at them, like, like, oh, back in my day, we worked for our money, kind of thing, And I don't know. I just don't like it. Both mindsets where you're just kind of playing this class war thing. It almost just seems like you know, the, if everyone's fighting against each other, they're not going to fight against the government or, just stuff like that,
Yeah, it's a weird. Yeah, you're right. It's a weird class battle that isn't talked about that much. Like boomers, in a weird way, I think want us to still suffer because we don't treat life the way they did, and in a weird way, they like seeing that. Like they can keep their pedestal, and then we want to see them fall because they don't get it, and it's not the same. It's like this weird unspoken thing, maybe outside of your direct family. You want the boomers maybe want their kids to do well, but also like they had way less like consumerism, short-termism, and like the need to compare themselves to other people as much, it seems, right? Because like they didn't have all this stuff, and like they probably didn't feel the need to be like, oh my god, I'm 16 years old and I'm so far behind. Look at all these 20-year-olds who are super famous and have all the money already, so I need to take more risk and figure it out fast. I'm falling behind.
Right.
Whereas like the people back then had like their community to compare themselves to, and like had this longer term. Obviously, the maybe ability for them to buy stuff was easier, and whatever, jobs were easier, but like they didn't have this like short termism thing that we do.
Yeah. No, I agree. That's a very interesting one. I think
But
yeah,
that's interesting though, because we still have both participants in the market. You know what I
exactly.
mean?
Yeah.
So it's like, how does that shake out, right? Is there, in a weird way, like some sort of flippening that needs to happen in that market mentality? Is that just what's happening in the market, right? Are we starting to see the riskier short-termism mindset of a new generation just embed itself into markets? I don't know. Yeah, it's a fun little mind experiment.
Yeah, it just seems it seems so it seems so clear to me that we're entering this period of time where capital is so plentiful that, and like leverage is becoming so permissionless. It's that, you are just seeing this pure kind of form of competition, in a sense, where like if you just have focus and discipline, you can, spin up a social media account, spin up a newsletter, spin up a product, spin up a course, spin up like whatever. And we're kind of getting over that phase of people being like, "Oh, you're selling a course," or like, "Oh, you're selling this or that." Like that's so old, man. It's like, dude, go back into the cave and go make a fire. Like go do something else. Like it's like you're seeing people being able to do all of that, and if you want to just like turn it off, you can just turn it off. And like it doesn't cost any money to run, doesn't cost any money to turn off, like anything. And so someone who is just purely has the force of will, they can accomplish what no one else has been able to accomplish in the past with zero capital. But it requires, I think, just so much sacrifice on a personal level. And I think the fact that that is accessible now and it wasn't accessible in the past just enrages people.
Right.
Right. Because someone who is capital poor can make more money than you did in your entire lifetime with 3 or 4 or 5 years of 18-hour days and not doing anything else, and working at the GM plant and collecting your pension. Like you're just like,
Yeah.
it seems like much more of a a virtuous or honorable thing to do.
Yeah, and that's why they hate change too, right? Like the change implies all of that stuff. It's like all wrapped up in one, right?
Yeah.
Bitcoin, like they see something like crypto and they're like, nah, that's not how the world works. You can't cut the line, it takes 20, 30 years of sacrifice and being on time and staying disciplined and being a provider and blah, 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 blah. So fuck that stuff. No chance. Like it doesn't make any sense. Or AI, like, no. Like I work with my hands, something digital doesn't make sense to me. Like, so, and I get it. This is where I do think it's interesting thinking like fourth turning type of stuff. It's like there are so many generational differences, and it's pretty crazy.
Yeah.
But anyways, all right. So wrapping up, moving forward, what are the couple things you're looking to here when it comes to this crude outcome, and maybe some of the yields where you think they're heading, and where you're looking out for a trade?
So I'm still short bonds. I'm still long crude. Those positions are on sides, and I kind of have my stops at break even, and I'm hoping that those just continue on. I think we'll stay below the FOMC level for bonds in the US, Eurozone, UK. I'm short. Yeah, basically bonds in Germany, Italy, the UK, the US, some JGBs. It's all pretty correlated, so you got to be careful. But I think equity is going to still rally. I think crude will move up to 70. I'm long. I think being overweight materials. If you have an Australian broker getting long materials in Australia and energy in Australia, because those have been underperforming, and then I think being long Aussie yen is a good way to express risk on duration risk, risk on bonds down, and a carry trade increase.
So
Yeah.
I was gonna bring this up real quick. I thought I had it up. This Boone trade, you're looking for that to go kind of below that level.
Yeah, I'm short those. And which is that?
10-year FGBO.
Yeah. So I'm that, and then also the 30-year. I think the 10-year I think is going to move down. I think the 30-year will move down as well, and then the I haven't put on a trade with size or anything like that, but there's like a spread to trade between the German fixed income, not to get too complicated, but German fixed income and Italian fixed income, and like the spread between those and how they're pricing risk, because they're both denominated in euros, right? But Italian inflation is actually like ticking up right now, and all these countries are short energy. So, if we have a rally in crude, these are the countries that get crushed the most, and they're also the ones that have cut interest rates the most, right? So, we'll see how it plays out. We have some pretty wide ranges in these markets for stocks and bonds right now, so I'm being really careful. And if the thesis is wrong, then I'm going to get stopped out and take it on. Well, I'm in the money now, so I'm not going to hopefully lose any money if I just get stopped out at break even. But that's kind of the logic right now. I don't know how high we'll go, because I think the wild card is Besant, because Besant knows all of this stuff, right? So, and now he's in a role where he can actively subvert things, either with rhetoric or telling Trump to say something or talking to Powell, or, he is the guy. And I think he'll cause a little bit of wiggles, and I think those are to be faded unless he does a massive operation twist where it's or something like that, where they buy the long end and sell the short end or something like that.
So I think you could get like this oil trade if you were talking kind of $72. I think you still have, like, it's such not a problem anymore. Like, oil isn't talked about by anybody right now.
Yeah.
And whenever I notice that, I'm like, okay, well, a trade has room to run before it becomes a problem, right? So like, even if it went up to $72, that's probably only at the point they would start even referencing it as like potentially being an issue. So I think there's a lot of juice left to squeeze here, especially if you you get this long multi-year bouncing level breaks, and then if you reclaim that level, that's pretty powerful. So.
Yeah, and go to the daily chart and zoom in on crude. So if you just zoom in a little bit more, the double bottom that took place. So one of the reasons I got long on Sunday, I published that in the Substack on the gap down, and the reason was see the other level, the candle that you had at the other bottom. That was the 10% rally day in the S&P. So the whole idea is, crude was directly correlated to the S&P because it was pricing this whole lower growth, this unwind of tariff risk, all this other stuff. And both of them rallied really significantly during that time, right? And since then, you've had, ES rally still, and then you had bonds rally a little bit, there's a little bit of an inverse correlation, and then, stocks just keep pushing to the upside. And if bonds keep moving down, you just have this great scenario for, crude to really rally. And then if you run the XLE RSP ratio on there, which is just the energy sector versus the equal weight, right? Like you keep on having that underperformance a little bit, and that's, beginning to tick up a little bit, which just means energy is underperforming the main index, right? Like if you have energy really push up and blow out, then you'll have that sector rally, and it's not going to be just a Mag 7 story. It'll be, well, energy's rallying, low quality energy is rallying, all these other things. It's very interesting actually, because in Europe, and then also, in Europe, and I forget what other country I was looking at the other day, like the energy sector is one of the highest performers right now. So, you have like, it's pretty interesting setup overall for, a rotation in equities as well. And capital to move out the risk curve, because it goes back to, Goldman Sachs and Morgan Stanley and JP Morgan and all those guys, they were saying that there's a recession, all that stuff, but they kept issuing credit.
Right.
So there's more credit flowing into the system right now, which is just going to push up growth.
See how it all comes full circle? There you go. All right. Let's wrap it up here. Another good session. I took away a lot from this. So
yeah, me too.
Good luck for the next week or so, and we'll touch base again.
All right. Sounds good.
And guys, if you have watched the previous video or watched this one, like we talked about for a good section of time, like now might be a good chance to dial in and follow what Flows is talking about, because he's seeing things kind of well right now, I would say. And if this is going to set up into something special down the road, you want to be, like we said, you want to have context. So I would get in there and at least sign up for his free Substack. And if you want to think about subscribing, like there are times where it matters more than others, right?
Yeah, so, for sure.
All right, man. We'll talk soon.
All right. Sounds good. Peace out.
See you later, everybody.